Wow, what a day. We normally don't have inflation reports in the Fed meeting on the same day, but we got the May CPI inflation reading this morning, and we had the Fed meeting today. So this was a huge catalyst for the market. This morning, the May inflation reading came out lower than expected, coming in at an increase of 3.3% year over year compared to 3.4%. And then month over month came in unchanged compared to 0.1% estimated. And then for core CPI, which is minus volatile food and energy, that came in at 3.4% compared to 3.5% estimated. And then month over month came in at an increase of 0.2% compared to 0.3% estimated. This is largely due to energy costs being down 2% for the month, which is why you're starting to see gas prices going down. The fact that energy costs declined by 2% this month, which is shown by our recent gas price declines, is spilling over to this lower than expected May CPI inflation report. So in my opinion, I think the Fed should take this May CPI inflation reading pretty seriously. And once you start having cooler than expected readings, more readings like that tend to follow. It tends to be a little bit like a cascade in terms of direction. In terms of today, I would even put more emphasis on this May CPI inflation report than the Federal Reserve meeting today. In Jerome Powell's speech, he was pretty much saying that the median projection of rate cuts among all the Federal Reserve officials and what's known as their dot plot or summary of economic projections is just one rate cut for this year and perhaps four rate cuts next year. And they revised up their inflation forecasts for this year as well as next year. Jerome Powell even admitted something actually pretty good, though, that the labor market, in terms of its strength, it's at a level where it is pre-pandemic, which is good because before the pandemic, the labor market was strong, but not too hot necessarily. And now we're at a more sustainable pace with the labor market. So I think that's something that the Federal Reserve wants to see, and that's good news that he thinks the labor market growth is more on a sustainable path right now. It's not extremely overheated, but all in all, I think that this was a good Federal Reserve press conference. Jerome Powell was a little bit more neutral. I wouldn't say he was dovish. I thought he would be even more enthusiastic with this better than expected May inflation reading. The fact that month over month inflation went unchanged, I thought he would overemphasize that, but he wants to see even more data, more months of progress for inflation to be confident to cut rates. In my opinion, I still think that we'll cut interest rates maybe twice this year. But look, I mean, the markets in Q1, inflation was hotter than expected. Initially, at the beginning of the year, we were supposed to have 7 or 8 cuts. Then it went down to 3 cuts. And with inflation being hotter than expected in Q1, then there was starting to be talk of no cuts at all this year, or maybe cuts starting next year. Luckily, Jerome Powell and the Federal Reserve has one interest rate cut planned for this year, which is good news, but I wouldn't be surprised if more interest rate cuts will happen this year, considering the better than expected and cooler than expected May CPI inflation numbers. Because at the end of the day, the Federal Reserve is going by the data. And if the data goes more in that direction and we see more months of inflation trending down, then the Federal Reserve will have to act and will have to cut. And I still think that the first interest rate cut will be September of this year. But either way, the markets really wanted to get these two things over with. And I think the market should continue to do well for the rest of June, in my opinion.